Hi and welcome to Axis Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends and market moving factors that set the tone for the day. Whether you are a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning on Thursday, and we'll start with the global markets. US markets fell overnight, led by losses in tech. The S&P 500 dropped 1.2%, the Nasdaq slid 1.8%, and the Dow eased 0.5%. AI-linked stocks were under pressure as Oracle dropped by over 5%. Other AI names like Nvidia, Broadcom, and AMD also declined. Asia-Pacific markets followed Wall Street and traded lower in the early hours. Japan led the losses with the Nikkei down 1.5% and the Topix down 0.6% as investors awaited a speech from the US President Donald Trump and the Bank of Japan's policy decision. The central bank is expected to raise rates to 0.75% on Friday. Moving on to the Indian markets, Nifty closed the previous session at 25,819, down 42 points, while Bank Nifty ended at 58,927, declining by 108 points. Nifty saw profit booking for the second session in a row and formed a bearish candle with long shadows on both sides. This reflects clear indecision in the market as participants wait for the US CPI inflation data due today. The index is now moving closer to a crucial support zone between 25,736 and 25,700. This area coincides with the daily lower Bollinger Band and the 61.8% Fibonacci retracement of the November rally. A breakdown below this zone could pull Nifty down toward 25,550, which is lower band of the falling channel from the all-time highs. On the upside, resistance is placed at 25,900 and 26,070. A decisive close above 26,108 would shift momentum back in favor of the bulls. At the sector level, the top gaining sector was Nifty PSU Bank, which rose by 1.3%, while the biggest loser was Nifty Media, falling 1.7%. Out of the 12 sectoral indices, 4 ended in the green and 8 closed in the red, reflecting a largely negative market breadth. Amongst the F&O stocks, Shriram Finance was the best performer with a gain of 2.1%, as the board will meet to consider a potential equity sell to Japan MUFG. At the other end, Polycab was the worst performer, declining 4.1%. On derivatives, yesterday's session was a battle of conviction. Nifty futures fell on a short build-up with open interest rising by 3.8 lakh shares, while Bank Nifty dropped 141 points on long unwinding as bulls exited. Nifty Premium eased to 79 points and Bank Nifty to 220, reflecting a lower carry appetite. FIIs added a modest 1,172 crore, barely denting the month's outflow of 14,006 crores. The index long-short ratio fell to 0.09, highlighting strong institutional bearishness. India VIX fell to a yearly low of 9.84, signaling retail participants see the decline as a minor dip. Options data showed aggressive call writing at 26,100, with the put-call ratio slipping to 0.77. This confirmed a bearish tilt as calls outpaced puts by a 2:1 margin. Retail dip buyers absorbed supply by exiting protective puts, but the lack of institutional support and cooling basis points to potential weakness. The RBI intervened to support the rupee at 90.38 and traders navigated a tight range between 25,600 and 26,100. On commodities, gold rose 1% to settle at $4,346. It continues to trade with a bullish bias with upside seen towards the 4,400 level. Silver rose to a record high supported by safe haven demand amid US economic uncertainty. Markets are also pricing in a possible supply deficit in 2026, which is lifting sentiment for the metal. Meanwhile, oil prices jumped more than 2% after the US announced a blockade on sanctioned Venezuelan oil tankers, which raised geopolitical tensions and eased concerns about a global crude surplus. At the India macro level, India's 10-year yield held around 6.58% as investors stayed cautious ahead of the RBI's scheduled 500 billion rupees bond purchase. Meanwhile, India's passenger vehicle sales in November rose 18.1% YOY, This was supported by festive demand and the recent GST cut lifting industry optimism into 2026. That's it for today. Please note that this podcast serves solely for informational purposes and should not be considered as financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you and see you tomorrow at the same time.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.